What's up, everybody? My name is Chris Clothier. I am your host of the Grind Podcast, back for another episode here this week. And I've got a what I think is an important topic here, really over the next 2 weeks, topics that are super timely, they're super important right now. And I'm getting ready to give a talk that kind of touches on both of these. So I thought, why not do something on the podcast for those of you that are watching on video, everybody that's listening in your cars right now. I was going to talk over these next 2 weeks about a couple of topics in business. One of them is very specifically related to real estate. That's today. And it's all about, I'm getting a lot of questions from a lot of people, and I'm addressing this next week at a big conference of like, what is happening? What's fixing to happen in the housing market? There's either this over exuberance where everybody is super excited, or there is this almost like trance that people are in. They're just waiting for the market to change. They're waiting for prices to drop. They're waiting for whatever's going to come next in the real estate market. And I'm not even saying that they're cheering for a downfall. I don't want to say it like that because that's super negative. I just think people are really wondering what the hell is going on. Like, how are we going to buy houses next year? How are we going to sell houses? How are we going to get money? I have spent the better part of 2 decades meeting with other investors. I've always taken one very specific step that has helped me tremendously in my, kind of experience as an investor. And that is, I've surrounded myself with really good people. I've listened to what other people have to say. I've spent time at real estate investors associations. I've spent time on Bigger Pockets. I've spent time and money at masterminds. And I have, I'm a firm believer that you become who you surround yourself with. Like you surround yourself with a bunch of Nimrods that tell you can't invest in real estate, and you're not going to do well in real estate. If you surround yourself with people that are upbeat, positive, they share your dream, they say, look, any of us can achieve whatever it is we're looking to achieve through real estate, you're going to do it. Same thing with being a business owner. I mean, you guys, I don't need to keep explaining this to you. So I thought, what a great time to discuss what's really happening in the market right now. What is it leading to? What's it pointing to? And then through all my conversations out there with other real estate investors and entrepreneurs, what do we all think is going to happen and how are we preparing? All right. So I'll just go through a few stories here today. Promise not to keep you longer than the normal 15 minutes or so. We'll knock this out real quick, give you some good data. If you got a pad and pen, write this down. If you're listening in the car, come back and listen again, man, because this is going to have some good stuff for you. Number one, let's talk about the facts. All right. What the hell is really happening out there in the real estate market? 1.5 million homeowners are currently serious delinquent on their mortgage payments, and they're facing foreclosure. 1.5 million. It doesn't sound like a lot when you think about the fact there's, I forget exactly the number of million, maybe 66 million, 68 million households in the country. My number may be off on that one. I'm confusing a fact there, but 1.5 million homeowners are currently seriously delinquent. Even more concerning, over 2 million homeowners are currently in forbearance. They have inability to pay even when their payments come back, and their payments are coming back online in the fourth quarter. So to add to that 1.5 million, another 2 million homeowners that most likely will not be able to make their payments when they come back out of forbearance and it's time to pay. On the positive side, 9 out of every 10 homeowners have enough equity today to be able to sell their property and at a minimum break even. That's a positive, very different than the way things may have looked in the past where you had people over borrowing and that type of thing. But if you start seeing a rise in foreclosure, an uptick in foreclosure, if you start seeing an uptick in interest rates to offset that uptick in foreclosure, you will begin to see a tightening of values, possibly even some lowering of values. So I think this 9 out of 10 is going to go down to 8 out of 10, 7 out of 10. So you kind of see what's happening here. 3.5 million people are in serious jeopardy of going into foreclosure or needing some type of program to be able to sell their home. Not everyone has enough equity to be able to sell their homes, and I would bet that those that are most at risk are probably the ones that have the least amount of equity. But I don't know that for sure. That's just kind of a thought from patterns in the past. On top of that, you have over 6 million rental properties. 6 million rental properties that are seriously delinquent on their rent today, and they face the threat of eviction. Some of those processes are already starting. Some of those are being delayed by government intervention. So what's going to happen there? Are landlords going to work with some or a majority or none? Who knows? It's those are pretty bleak facts. I mean, those point to what's going to happen next. This could be a recession-inducing housing correction. A lot of houses coming onto the market, a lot of houses that are underwater, a lot of houses unable to sell and pay the bank lines off. So you're talking about a lot of possible short sale scenarios, and a whole lot of properties that may not be able to meet their rental obligations. All right, that's bad. Well, let me tell you the other side of the coin, because there's always another side of this story. The United States typically will build 1.1 million new homes a year to keep up with what's called basic consumption. We need 1.1 million houses a year built from the ground up to meet basic demand. Going back to 2009, we have fallen several 100,000 properties short, and demand has only risen. So early in the previous decade, demand wasn't really there. So 1.1 may have been basic consumption today. Maybe it was a little less back then. So we weren't as bad off. Today, 1.1 million homes need to be built. For the past 4 or 5 years, we've fallen 300,000 to 400,000 homes short. This year, we're only going to build 700,000 new homes from the ground up, which means we will be 400,000 properties short of what's needed for basic consumption. What does that mean? That's bottled up demand. That is a lot of people out there that are currently renting that want to buy, and they can't. Now, before I go any further, those of you listening, those of you watching, the United States does not have a single housing market. Every single city is its own unique market, and every city typically has multiple markets within the city. So, there's thousands upon thousands of individual housing markets all around the country. They do not all act the same. They all act differently at all times. So there may be some similarities, but there again, they're all independent. So where you live or where you invest, they may not be behind on demand, or they could be years behind on demand. Currently, right now, as we stand, we are 4 million homes behind on basic consumption. That is a massive amount of pent-up demand ready to get going into the market. So with that being said, of course, we know that's the case. Those two things they offset one another. Add into that the fact that outside of basic consumption, we have this brand new phenomenon. It's been going on over really the last 24 to 48 months of this build to rent, where in some scenarios today, it's gotten so out of hand, entire neighborhoods are being built with the intention of renting every single property in there. And these are not low cost homes. These are not, and they might be starter homes, but they're certainly not cheap or low end by any stretch. I mean, these are nice homes, nice neighborhoods, great amenities, because that's one thing we're learning right now. The house buyers today, they want amenities. They don't just want the nice kitchen and the nice bathroom, but they want parks. They want dog parks. They want swimming pools. They want the country club type atmosphere. They want fenced yards. They want sidewalks to walk on. They want walking trails. And this is what's in demand from today's buyer. And so, these entire neighborhoods are being built for renters. And if they can find that without buying it, because the house they want to buy isn't offering these amenities, but the rental neighborhood is, they're in, and they're all in. So right now we're looking at these, some of the houses that are being built are going straight to rent. That only drives values up, right? You have institutional investors that are coming in and buying these entire neighborhoods. They're funding them on the front end. They're putting the money up to build these neighborhoods. So do not think for a minute that those same investors are not waiting to buy every single house that gets built, all of them. So now every house that goes through foreclosure and comes back out, those institutions are going to be after those houses, not just the owner occupant buyers, but every investor out there that wants to buy is going to be after it. So in short, when I get asked all the time, hey, are we in a housing crisis? The short answer I have is today we're not in a housing crisis. I do not see an overall reshaping of the housing environment. I do not see this massive influx of new houses that come out there. They're going to drive prices down. I don't see major changes to interest rates. I don't see this sudden, again, this influx of any any phenomenon that's going to change the direction of the housing market. I don't think we're gonna see any type of massive housing crisis. Here's what I do see: that we're in a spot right now that enable as an investor to get stable returns, enable to get consistent returns, enable to build a successful portfolio. We have to do things different. We have to do things different than the way we have been doing them over the past decade, because the housing market is changing. There's a whole new dynamic out there that just did not exist. It's really Wall Street. And it's also the fact that there's just nothing, there's no catalyst that's going to suddenly propel opportunity there in front of us. We're having to figure out how to make opportunity of what we have. So, and the reality is that's what I'm terming innovation. Innovation is simply just doing something different. It's doing something different than the way we've done it in the past. Innovation doesn't have to be technology. It doesn't have to be an easy button. And by the way, I'm not going to go into, I'm not going to spend a lot of time on this whole iBuyer phenomenon, these companies that are buying houses sight unseen online, because I just don't see that as a massive game changer right now. I just don't. They're going to get their piece, but I just don't see them winning in the end. Perhaps they will continue to innovate and change their business model, but that's for another day. All right. So how do we as investors, and how the investors I've talked to, how's everybody preparing for kind of what comes next? Number one, it's all about getting personal. Look, real estate is a very, very personal driven business. It's very, very face to face. If you are able to improve on your salesmanship, your relationship building, your ability to build a relationship over the phone or even in person, it's going to behoove you. It's going to be good for you. Right now, I would be the advice I'm giving investors, and this comes from myself and others, is meet with as many people as you can, build relationships right now, whether that's lending relationships, buying relationships, selling relationships, rental relationships, anything that you can. You need to be building relationships today. You need to have your team really, really not only robust, but ready to go, ready to move at a moment's notice on opportunity. Same thing goes with anybody that you may need, whether it's from the plumber to the electrician to the house painter to the general tradesman. Right now, it's about building your team. You need to really, really double down. Gone are the days when you're going to be able to just buy houses because of who you are. It's going to be relationship driven, especially over the next, I would say, 4 to 6 years. You really, really, really need to be building your relationships. And number two is about getting creative. When I go to these masterminds and I get to hear from other companies and other business owners and some of the stuff that they're doing, and it just blows me away at how creative some of my, fellow investors are, from making what they believe is a fair offer to purchase a home, and one that they need to make, an offer they need to make so that they can profit ultimately in the end. But understanding that most home sellers, especially if they're any form of distress or having any form of issue, money's not always the mover. Oftentimes it's being able to listen and deliver exactly what somebody needs, such as starting a moving company. And the idea is, if you need to sell your home, but you can't afford to move into a new home, create the avenue to be able to assist someone with getting into a new home or getting into an apartment, and then provide the moving company that's going to move all of their belongings into that new location. They're not thinking about selling their house. They're thinking about, where the heck am I going to go when this is over, and how am I going to get there? Solve that problem and you get the house. I thought it was so creative. Same thing on the, especially like on the rental side. If you've got a property and somebody needs you to get creative with your lease or with what you're willing to allow them to do or have or bring or whatever it ends up being, solving someone's problem oftentimes is not monetary. Oftentimes it's some other thing that they need solved. And really smart investors right now are working on their skill of being able to listen. Quit trying to solve a problem that's monetary, like I want to have the lowest price or I want to have the highest price when I'm buying it, and solve the issue that's facing them of, I'm going to provide a service that you need, or I'm going to solve a problem that you have, and in return, I'm going to get your business. Everyone I'm talking to that is experienced in this industry, that's the number one thing they're doing. They're gearing their teams up to learn how to be creative and solve the issue at hand instead of just trying to do a business deal. Now, we would think that that's basic and standard and that we should all be operating that way all the time, but we don't. We're not built that way. Most companies, most entrepreneurs are built to make a profit, and they're built to make the buck. And so, if the past decade has been anything, it's been easy. It's been easier for us to do business without being really good at the basics. It's been a monetary type industry. It's getting ready to change. The last thing that I see people doing, and this is the last one I'm going to leave with you today, I'll go into more depth with this with my talk, and in a couple of weeks after I give my talk, I'll follow up with this podcast, okay, and get even more in depth. But the last thing is you will become the 5 people you surround yourself with. So right now, many investors that I know, they're trying to get to the highest level they can of surrounding themselves with people that they want to be influenced by. There are a lot of masterminds out there. I'm not going to promote any of them. I'm not going to sit here and tell you that you need to go join a mastermind. But I know a lot of investors that today have chosen, I'm going to spend money on myself. I'm going to join masterminds of like-minded real estate investors or like-minded business entrepreneurs, whatever it ends up being, because I need to be surrounded by people that are thinking differently than me. I need to be surrounded by people that are having success in their own way, because I need to know about that. It's going to make me a better investor. It's going to make me a better business owner. It's going to make me better prepared for what comes next. You will become the 5 people you surround yourself with every time. So if you surround yourself with people that are playing at your level or below, you're not going to grow. If you surround yourself with people that say, this market, you don't need to go change anything. Just offer the best price. Get aggressive with the way you're handling your money. I'm telling you that if you want to grow, and I kind of hate this cliche, but if you want to level up, you need to level up who you surround yourself with. So right now, be taking a look around and say, who can I get into a circle of influence to help to influence me for what is coming next? Guys, the housing market is in such a unique and never before seen position right now. But there's a lot of markers out there that tell us how to prepare for what comes next. I just gave you 6 of them with 3 ideas that other investors like myself are using right now. Other companies like ours are preparing to get ready for the next housing market, for what we see coming in the next few years. Hopefully you found that informative. Hopefully you found that helpful. Hopefully you're getting ready to take some of those steps. If you need anything, send me an email. Leave me a question in YouTube or on Instagram, wherever we post these, all of our podcasts. Let us know what we can do to help you, and let's get going. Until then, guys, commit to the grind. We'll see you with our next episode next Friday. Y'all take care.